why I've taken this trade is because I am seeing a nice candlestick formation based on the breakout of this horizontal channel. This time around to the downside, I am seeing a what it seems a valid breakout, congestion, continuation type of setup, and moreover at a very specific junction in the chart, especially on the longer time frames, more specifically on the weekly time frames. But I'm gonna show you the weekly time frame in a second. Let me firstly show you the daily. All right, the very moment I took this trade, and then I will zoom out into the weekly as of why I have indeed taken this specific trade. Okay. Anyway, if I scroll back, you can probably see how price has been trending. Let me actually zoom out a little bit. All right, so we can clearly see how price has been indeed uptrending for quite a while. All right, then we've we've seen a very common market occurrence, a very common market pattern, which is an uptrend or a downtrend, it doesn't matter, but at any rate, a trend in market condition, then exhaustion, and from there, breakout to the downside. I keep on trading this type of patterns day in and day out because they are a very, very high quality setups. Okay, you can easily score up to a 70% win-loss ratio in this type of setups. Okay, so trending scenario, exhaustion signified by a rather horizontal range, right? That range can take the shape of an actual range, or also sometimes of a triangular formation. Okay, at any rate, it's a congestion area which eventually gives way in the opposite direction, okay, in the direction against the former trend. And whenever that happens, my experience is that you get quite a push, all right, quite a nice push to the downside against the trend, at least long enough to squeeze some, some interesting profits in there, right? Anyway, now let me show you how actually before getting the breakout against the trend, we saw a fake breakout to the upside, which in fact kind of makes this, kind of makes this whole setup even more valid. Let me explain that in a second. So, uptrend information, then congestion, range, exhaustion, however you want to call it, and then what we saw is this fake breakout formation. You know what a fake breakout is, or what it looks like is basically price overshooting a range boundary, okay, one specific level, probably triggering a number of stop losses, or probably faking a number of people into a long trade, people who were thinking that this uptrend was to be resumed to the upside. Okay, this is precisely the reason as of why I always advise you guys to not trade the initial breakout. Okay, I always advise against trading the initial breakout of a range or a trend line or a triangle or whatever breakout, whatever type of breakout you may be trading. Okay, don't quite jump on board right away, because believe it or not, up to easily 50% of the times, breakouts end up being fake breakouts. Okay, and what it may seem originally as a valid breakout, especially in the direction of the trend, then it turns out to be a fake breakout and price dives back down immediately after. Okay, so don't trade the initial breakout. Instead, wait for the typical breakout, pullback continuation pattern, or perhaps breakout, congestion, continuation pattern, any of those beautiful confirmation patterns after the breakout that I've been teaching you guys on the website. Okay, so this is precisely what I am seeing here, a solid breakout candle. Take a look at that long, beautiful this candle here I'm talking about. Okay, take a look at that beautiful long and solid breakout candle. Then we have a little bit of a pullback. I would have actually liked this specific candle to be shorter, okay, to be more of a doji or spinning top, or however you want to call it. That's the ideal formation. Okay, I'm talking about a candle similar to that one there, or let me search for any other, perhaps this one there, etc., etc. A very tight, very tiny, small candle right below breakout levels. This one had quite a long wick to the downside, but sometimes the market don't play nice, don't play fair, and you don't quite always get the textbook perfect formation, right? At any rate, the price action reading seems to be valid enough for me to have triggered my short entry right there, a couple of pips below the low of this candle, right? Obviously, the stop loss goes a couple of pips above that level. Now, the reason as of why I truly like this trade is because of what's going on in the longer time frames, okay? In the weekly time frame, to be more exact. As you guys know, I like to combine, well, both the actual entry time frame, okay, my what's my setup chart, with also the longer time frames, just to make sure that I am taking a trade at the appropriate junction in the chart. Okay, so if we take a look into the weekly time frame, we can see how that range that I was mentioning before is actually happening at the previous swing top. Okay, at the previous swing top right there, in fact forming a double top. All right, so we had a nice push up, price stopped out at that level, gave us the standard retracement channel. Okay, this is a flag formation for all of you who are interested in, well, knowing the name of every or different price patterns. From there, the flag broke again in the direction of the former trend, but it found resistance once again at that level. What happened? Well, as we've seen in the daily time frame, price formed actually a range right at the top of this up move, and from there it gave us a little bit of a fake breakout. Okay, a little bit of a fake breakout in there, exactly nailing right to the pip the previous swing high. From there it found hard rejection, very very strong rejection. Take a look at this long red candle, okay, that we've seen through the week, and well, price eventually broke free from this congestion area to the downside, confirming this rejection, okay, this bounce, and therefore confirming this level as indeed a valid resistance point. That's why I am betting here for a short entry. Not only because I am getting a valid, sorry about that. Not only because I am getting a valid, from a technical point of view, a valid breakout congestion continuation pattern, or so far that's what it's looking like, but not only because of the pattern itself, but also because of where in the chart that pattern is taking place. Okay, and for me that's just as valid, just as important as the pattern itself. Remember guys, it's not only about the trigger signal, it's where in the charts that signal actually takes place, and the longer time frames, okay, levels of support and resistance in the longer time frames can totally help you in that regard. Anyway, that's basically it as far as this trade goes. I will have to wait until today's candle closes up for the day in order to see if I can actually score, or rather secure, some profits or not. But at any rate, as usual, I will keep you guys updated. Okay, cheers, bye bye. Hey guys, Hector here. Just a quick update to let you know that I've trailed my stop loss to break even, and I've cashed out 50% of the trade. The candle is still open, okay? I mean today's candle, right? This candle is still ticking, and the reason as of why I've closed out, I've taken this move, it's well, basically because today is Friday, and I simply wanted to get a little bit of that trade out of the market before the shop close, before the markets close for the weekend. Okay, some of you ask me whether it's okay to keep a trade open or running through the weekend, and in my opinion there is absolutely no problem with that, as long as you are trading off the daily, the weekly, or the monthly time frame. Basically, as long as you are trading off the long-term charts, right? Then if that's the case, chances are that your trading window span will be certainly larger than the intra-week action, and therefore chances are that you will indeed have to leave the trade open running through the weekend. Okay. On the other hand, if you are taking trades based on intraday or intra-week time frames, let's say the 4 hours time frame, the hourly time frame, the 30 minutes time frame, then you should not leave your trade open through the weekend. Okay. In fact, if you are forced, if your trade is pushing you towards leaving your trade open through the weekend, and that trading decision was taken based on intraday or intra-week time frames, then it means that at some point your trading decision or your trading analysis was flawed, or simply that your trading plan didn't quite pan out as expected. Okay. There is no reason whatsoever to keep a trade running through the weekend if you are taking trades based on intra-week or on intraday timeframes. Okay, but again, if you are trading off the daily, weekly, or monthly, it's entirely okay. Anyway, like I say, time to close the shop for the weekend, and I'll keep you guys updated on this trade next weekend. Bye bye. Next week. Bye bye. Hello there, Hector Deville here. Final update on the New Zealand dollar against the Canadian dollar. I've closed the trade. Right there is where I closed the second portion of the trade. Okay, that was my entry, that was my first target, and that was my second target at the close of that second candle. By the way, this is Sunday evening's candle, right? So it's not really a daily candle in itself. What I usually do is to simply combine the Sunday candle and the Monday candle in one single, as if it was just one single, one single daily price action. Okay, we can see how on the second day, all right, the typical second push we get upon a valid breakout, it's been also pretty solid. Maybe not as good as the first one, but nonetheless, it's been quite sizable enough to squeeze some more profits on this trade. This is a rather normal thing to see the second candle to be, while perfectly valid and quite significant, not quite as much as the first one. All right, like I say, that's normal standard market behavior. All right. And apart from that, nothing really worth mentioning. A pretty stress-free trade with two consecutive targets. None of them, at no point price came back up to challenge my original stop loss, and nor it did really once I moved it down to break even plus a spread. Okay, so all in all, pretty stress-free trade, pretty stress-free breakout of a range with a typical breakout congestion continuation pattern. Okay, all right, folks, that's all for this trade. Bye bye. Cheers.